Everybody. Colin, can you turn Josh's volume off? So, because I could hear myself through Josh's computer, I assume that means that you guys can hear me too. So that's cool. Someone could check the YouTube. I'm in the office for the first time this calendar year, so another different computer setup, and it was not working this morning. I couldn't get my trading software to work this morning, so luckily Josh and Brant were kind enough to hop on and fill in, but then Josh was also kind enough to fix the computer for me during the day, so hopefully everything works as it should. That'd be cool. Awesome, Dave. Thank you. Today is Wednesday, July 2nd, I believe. I'm an associate member of T3 Trading Group, which is an SEC registered broker-dealer and member of FinRecipic. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. My position disclosure is the same as it was, except I got out of CoreWeave. Unfortunately, I got shaken out of CoreWeave at like the high right before it rolled down today. I wasn't planning on getting out, didn't follow my game plan on it, but that's because I got hit with the bill on the borrow from June today, and it was really, really expensive. Hit me with a $52,000 bill for borrowing CoreWeave last month. So I was like, yeah, I think I'm done with this name. So that sucks, and I'm out of that name. Market closed up today. Yeah, I tried to give it. Look at this fucking. Whoops, I'm not supposed to curse. Look at this stop loss I put in. Found out about the bill somewhere around 10:30. Put the stop loss in above 158. Got stopped out there, and then it went down. Not much else went down though. Definitely not this market. SPYs closed up 0.4%. Another green day. Qs closed up 0.65. IWM closed up 1.4. Sick move from the Russell. TLT was down, so no one's too fearful about anything. Well, I guess with that said, gold was up. Bitcoin had a huge day today. Wow, it's the first time I'm seeing that. I didn't notice that Bitcoin was up 4% on the day till right now. And oil was up big as well. Alright, so this market's unstoppable. We're setting records again, guys. We're setting records. Short-term tactical. Do I still have Pat's note up from this morning? I don't, because I was on a different computer at that point. Where's Pat's note? There it is. Short-term tactical closed in the red for yesterday by a tiny margin. It's technically a day 3. And then today we closed on high, so I'm pretty sure the short-term tactical is going to be in the red again tomorrow, which makes it a day 4. So we're starting to get to record-setting territory. I've almost never seen short-term tactical stay in an extreme on one side or the other for more than 3 days in a row. There's been a couple of occasions where we've seen 4, and then the real record breaker, and I honestly don't even remember how many days in a row it was in the April period on the green side, on the downside. It was like 6 or 7 days in a row. At a certain point, it was really crazy. And now we're starting to do that to the upside, and it's especially interesting because assuming that today we close in the red, which I'm going to assume is correct, that's going to be 4 days in a row. But if you remember, the 2 days right before that, we were like just outside. It kind of in the way that this is just inside the red. We were just outside the red. So it's like almost a day 6. So we're setting records. This market is extremely, extremely strong, and we are now in the month of July. This is what we're expecting. We are expecting a really strong market to continue here, especially for the first probably 2 to 3 weeks of July, if not the entire month, plus the beginning of August. That's what we're expecting, because there's just going to be a big unstoppable bid, and you never want to short a dull market. It's a holiday week, nobody's around, but the robots don't know about holidays. They just continue to do their thing, and they're going to continue to be on the bid, and they're going to continue to drive this market up. At the same time, it's been difficult to do anything new these last couple trading sessions because we keep kind of being in no man's land zone. Not a $10 plus extension from the SPYs, but not under 5, which would be viable. So it's been really hard to do anything new the last few trading sessions in a row. And just from the perspective of good trading, I really wanted yesterday's correction. Like yesterday we had a single day of time correction in the SPYs, we had a single day of price correction in the Qs. I really wanted yesterday's correction to last for more than a day. Go sideways for a few days up here, let this ADMA catch up, let a bull flag build out, satisfy short-term tactical a little bit, and then that would be a great opportunity to buy the market for continuation of the bull flag. But we are so strong, it's almost not even letting a responsible trader in. It always frustrates me sometimes but it's just by nature of the business, and it can't last for them forever. But every once in a while you find yourself in an environment where like the undisciplined trader who doesn't know anything about anything can make more money than someone who is knowledgeable and understands how markets are supposed to work, because while chasing price in the long run is not a good strategy, in the short run, every once in a while, it can pay you in the right market environment, and it seems like we're in that environment. We are just continuing to be up and away. This market is incredibly bullish. For the SPYs, it's technically an inside and up. So I see no reason for us to stop moving higher. I was just hoping we could get a little bit more of corrective action to give us the setup to be able to buy. And tomorrow is July 3rd. Tomorrow's only a half day, which is interesting. And we have a really important non-farm payroll number tomorrow. But historically, tomorrow is the most bullish day of the calendar year. So we'll see if tomorrow we are able to continue the trend and have another really bullish 3rd of July. Or we'll see if the jobs number can come out and put a dent in that traditional statistic or not. In Pat's note as well, there was a really good primer from JP Morgan. They tend to always publish this on kind of what to expect insofar as the numbers. And just kind of eyeballing this, it seems like the risk is to the downside a little bit on tomorrow's number, especially when you combine this with the extension. But again, it's interesting that this is falling on basically a holiday trading session, because people aren't going to be around. I see Bill out of the corner of my eye letting me know that there's not much volatility priced in for tomorrow. That makes plenty of sense to me. There's a good chance that we get some good action in the pre-market, and then by 10 o'clock, 10:15, the market just flatlines, or flatlines with like that line pointing up, because that's all that seems to happen with this market right now. Not sure, Rich. It's good to note if it's a little bit dated, a few days old on there. But I'm sure you don't want to take this. I think you want to view this primer from JP Morgan as a guide more than anything. I remember on the last number, the number came in. I don't remember what it was, but it came in. It was a really good number. It was like the 5% here, where the market should have, I think, gone up 2% based on it, and we did not rally as much as was expected. So this is not a guarantee that what this shows is what's going to happen, but I think it's just a general guide to have some expectations on, hey, if this is what the number looks like, we can generally expect the market to be up a lot, up a little, down a lot, down a little, etc. So we'll see how that plays out, but it should be pretty market moving. But yeah, I mean, besides that, I really don't have anything else. I was just having some computer issues, and it was my first day back in the office in this calendar year in 2025. So just a bunch of chatting and catching up with people. I really did not do a whole lot new today. It was primarily just managing my open positions. I did pretty well at Tesla. The Tesla trade that we called out pre-market was probably my best trade of the day. When it shot up here on missing on their cars number. They missed on their cars number, but I guess the whisper number was much worse. So it shot up. 320 was a level. So I mentioned that as best as I could in real time. Like I remember on the downside, we had been talking about 315 to 320 as a zone. So when it overshot, when it shot to 320, I was like, all right, well, that's the upper band of that zone, and the number was a miss. I think we might be able to take a shot shorting this or shorting it back through 320 or versus 320 or something like that. So that was a nice little news move. They faded it pretty hard, and then the whole market's so strong that it ended up Tesla ended up holding in pretty well. But besides that, and besides getting stopped out of CoreWeave, unfortunately, I really did not want to get out of that CoreWeave. I like this short. I think that this short looks good, especially after today. Putting pressure on that 150. I think that this thing's going to give a move to at least 130 to 140 on a further break if we can break through this 150. I love that it closed on lows and the market was otherwise strong. So love the idea of being short this thing. I just, I got, I took one on the chin insofar as that borrow, and it was because I was trying to, I don't know if this is worth even mentioning or if it's educational or not, I had been avoiding shorting CoreWeave stock outright because I knew that the borrow was super expensive. So I had been shorting it primarily through options, through kind of selling calls, like selling in the money calls instead, because they basically trade like the equity, but it was enabling me to avoid the borrow. But I kept getting assigned on it over and over and over again, and then when I would get assigned throughout the following day, I would work out of the stock short and I would work back into the options, and then the next morning I thought I'd get assigned again, and the next morning I was getting assigned again. And maybe that was just because I was making the mistake of doing it with in the money options, because again they were trading like very, very much in line with just how the equity traded, and I thought I was doing that as a way to kind of be cheap but realize the trade. And for whatever reason, just assigned day after day after day, and when they assign you, it's from the night before, so then you're paying that overnight borrow cost, and I just got hit pretty hard. It's $52,000 for 1 month of borrowing stock is not a small number, I don't think, regardless of account size. So that's pretty much all I got. I am happy to answer any questions anybody may have. First, from David, regarding SEDG, what was your technical reason to enter the trade, and what would have been your stop loss for your short today? Looks like 2280 area was a resistance area. Do you typically let a few candles play out to try and see a better setup before you try and short SEDG, since you are very familiar with it? So the first thing I would mention about this SEDG, and I tried to allude that when you asked me about it earlier, is it's just a really, really crazy stock, and it's moving based on the Big Beautiful Bill, because originally there was a provision in it that was going to just destroy this company and, in my opinion, make them have to go bankrupt. And then it seems like they pulled back on that provision with the Senate, but not entirely, but they pulled back on it in a way that the stock rallied as it should have. And then I guess with Congress or whatever struggling to be able to pass the bill, it's just been enabling this thing to kind of continue to rally higher. And now most of these names, Solar Edge, Sunrun, First Solar, all of them have 100% retraced the gap down that originally came from the Big Beautiful Bill when they were pulling out the provisions for solar. So it's a very crazy stock even to begin with, and it's very in play right now because it's moving based on that news. But there was like a broader resistance as you kind of got up into yesterday's high area. So I didn't hate the idea of looking for a short into yesterday's high if it gets up there, but that wasn't actually the trade that I took that I called out. When I shorted it, I actually shorted it off this candle here at the 10 a.m. candle, and I jumped into it very early. I didn't wait for the candle to close. I was shorting it, honestly, even before it broke back down through 2320. Really, that trade would be just kind of like a false. This is a bull flag, so technically this is a bullish continuation trade, but context matters, right? So the context of that bull flag into 2320 is that this is now getting back into the zone that it was trading at prior to the big beautiful gap down. That's what we'll just call it, the gap down from the big beautiful bill. We'll call it the big beautiful gap down. Since it's trading back into the range that it was at prior to that news, generally that range should be resistance. Anybody who was long the stock and got screwed because of the news, now that they're back to break even-ish on it, that's a common place where sellers will come in to sell. So you could have looked at yesterday's high, but for me it was just like roughly an area that I was looking at, which includes yesterday's high, but kind of also includes this entire range that it was in the couple days before the big beautiful gap down. So I was kind of just looking at that zone. So now you got, day two to the upside. I think everyone knows I don't like trading day twos. Day twos are not a good risk reward to buy, but a lot of times they can be too early to short. But it was a day two to the upside back into that zone. So that's kind of what I was looking at. And then when the bull flag actually broke out here, it didn't break out well. I don't know how else to describe that. There wasn't like a momentum break higher through this 2320 that bulls would really want to see for continuation of an in-play stock or anything like that. Low volume on it. So I kind of just thought that given the zone on the daily chart plus the extension on the 5-minute chart, so it was breaking out a lot of the time on bull flags. If the ADMA hasn't caught up to the base, which you could kind of argue that maybe it did, you have a higher probability of a failure on the pattern. So it was kind of just looking at a combination of those things that I put that chart on. For me, that was just kind of a cute trade. I was out of it by, I think, 22.65 into this down move, so I didn't even capture the entire move down to 22.40, and then that was it. For stop loss, depends on the game plan on how you want to trade it, but if you're just purely trading it off of that 5-minute chart and then using the daily chart as context, the high of that 5-minute candle is an appropriate stop loss, the high of the 10 a.m. candle. So, appreciate the question. I hope that helps. Pete just saying names here. I don't know if you're saying those names because you're trying to put eyes on them or if you're asking me about them. Cores is continuing to move higher. Buyout speculation from CoreWeave, building out an ascending bull flag, ton of extension, and Meta technical pullback now. Interesting relative weakness in Meta today. I'm just seeing that right now. I didn't realize how relatively weak Meta was today. It's pretty interesting. Relative weakness on Meta, phenomenal stock recently. Seems like it's just part of the rotation trade that we saw yesterday, where yesterday we saw a big rotation out of the last quarter's winners. Just again rotating into some other things out of those big winners now that the first half and first quarter ended. Looks like eventually it'll give a buy opportunity to buy the dip, especially if the market stays strong. Where is hard to say. 705 area might be a spot to look at. The zone between 708 and 702. So that's what I'd be looking at for Meta. But interestingly weak today. From Jerry, could you speak to how you handle a breakout on the daily chart if the stock is already extended intraday or if the stock is counter trend to the market intraday? If the stock is counter trend to the market, to the market itself intraday. Sure. So starting with the first part first. How do I handle a breakout if the stock is extended on the intraday basis? I don't necessarily shy away from the trade, but if it's extended on the intraday, most likely it means I'm going to have to give it a lot of space risk. So I need to assess if the risk reward of that space risk is still worth it with the extension. It might not be, because if the reward profile is not great compared to the additional space risk from it being extended, then I might not want to take it. But two is if I do take it, I'm just going to be taking less size because I have to give it more space risk, and if I want to risk the same dollar amount, it means less sizing. So that's that. And then if the stock is counter trend to the market intraday. So in other words, I'm looking at a stock that's breaking out, but the market is trending down, right? Stock's breaking up, breaking out, stock is trending down. As the market's trading down. So the market in that instance is a layer of probability against your trade working. It just means that your trade is going to have a higher probability of failure because there's a higher chance that the market just causes it to fail. That's not the right day for it. So one question that you want to ask yourself first is the stock in play for some reason? Did the stock have news? If the stock had news, that lowers the correlation to the market. Is the stock trading on unusually high volume? If the stock is trading on unusually high volume, it'll lower its correlation to the market. So that's not to say that the market being weaker that day doesn't matter. It still matters. It just makes it matter less. So all the market is a layer of probability. If I'm buying a breakout and the market is against me, it means I want to take less stock, less risk, because I've got a lower probability of success on the trade. And I want to be looking at my other layers of probability, again, news, volume, to see if it can counter the negative layer of probability that's stemming from the market, if that makes sense. I hope that helps. Sounds good, Mr. Trees. Good to see you. Thank you, Katie. Appreciate you joining us. Yes, I'm back in New York City, at least for a little while. Can you explain how you like to manage your open positions, swing positions? It's a very open-ended question, and I'm not sure I've got a great answer for you on that because it's entirely dependent on the trade that I'm getting in and the game plan that I created for that trade prior to getting into it. So, you know, what is the type of trade that I'm taking? What was my game plan for it? That's going to dictate entirely how I'm managing open swing positions. I'm following the preset game plan that I already have. So I don't know if you have anything more a way to make the question more specific, in which case I could probably give you a better answer, but otherwise it's just kind of a generalized answer. It doesn't matter if it's a swing position or a day trade, it's the same thing. You're just following the pre-established game plan that you have for the trade. How big was the position? The compliance department doesn't like me talking about the size of my positions, especially on YouTube. That includes with the VTF generally, but especially when I'm on social media, so can't really answer that question. But obviously it was big enough to generate that degree of borrow costs, so not too fun.
Carry cost, not borrow.
Carry cost, overnight carry cost. I thought that you pay a locate fee intraday and a borrow cost for the overnight. Is that not the right word?
I think it's I always assume locate and borrow are the same term, and then carry.
So I got into this with Dave Lancelotti one time, who is our head of operations, who handles all of this stuff, and
yeah, I don't know how they work. I've always just assumed that
he didn't like using borrow in exchange for the word locate.
Oh, interesting.
He was like, no, locate is specifically when you are paying to locate the stock in that moment. And then he was saying borrow means that you're borrowing it, you're keeping it overnight, you're borrowing that stock for a longer period of time, then you pay the overnight borrow.
I could be wrong.
Carry, I think, is a good synonym, though.
I've always used it as borrow and locate are interchangeable, and then carry.
I used to use borrow and locate interchangeably also, and then Dave corrected me, and I would assume that Dave is right on that stuff because that's what he does.
That's been his job for the last 75 years?
It's been his job for a long time. You pay so on Rich's question, this is what we were just talking about. No, well, that's a third cost.
That's different.
It's different. There's a locate cost, right? So a locate, for example, is if I use this thing here you can see on my screen share, and I type up CoreWeave, and I want to see how much it costs to borrow 100 shares of it. I press that, and it gives me a quote. That's interesting that I'm only getting a quote from one provider. We have 2 providers for locates now. It must mean that one's not giving one at all. But this locate's actually pretty cheap. CoreWeave. I'm only getting a locate from one provider. $4.55 per 100. If I type up XPXL, which is hard to borrow, that one should give me 2. Yeah. Say we get 2 locate providers now, so you can choose the cheaper one. Yeah. So for CoreWeave, only one of the locate providers even has inventory. For SPXL, both have inventory. One's charging $2.60 per 100 shares. One is charging $1 per 100 shares. So that is the cost to locate it if I want to short it intraday. If I then keep the stock overnight, you pay a cost to It's a borrow cost.
Right,
You're
what
paying
I call
to
carry,
keep
but,
it.
Yeah, a borrow cost.
Borrow cost, aka carry cost.
Basically, what happens is there's a limited float. So guys that want to short it, right? They actually have to. Whoever's giving you the borrow intraday, not a big deal. They'll charge you the locate. They get it back. It's not a big deal. Overnight, they basically have to turn to whoever the long is and say, "Hey, somebody wants to borrow your long to be short." And a lot of times they will pay, right, like big institutions, to lend out that stock. So as a result, since they have to pay somebody to lend out that stock, they now have to turn around and charge the people that are holding it overnight. Sometimes on these really crazy stocks, Circle, Corp, I mean, I've seen rates, like there could literally be things where it's so hard to get, but somebody's like, I can get it, but then the borrow rate becomes like 2,000% on a monthly.
The borrow on CoreWeave last month, it looks like it was averaging about 170%.
170%.
And now it's at 250%. It went up.
Yeah.
So the math on that.
Yeah, they're loan sharks. That's exactly right, Rich. That's exactly what.
If you kept $100,000 worth of stock short overnight, and you were paying 170%. Fuck, that's shit. I gotta stop cursing on the radio. I did that twice. And you're paying 170% on that. I don't even need the calculator. That's going to be $170,000 annualized, right? So then you divide that by 365. No, that's not right. I typed that math in wrong. $170,000 divided by 365.
It's actually 360, but it doesn't matter. They do it. I don't know, for whatever reason, when they calculate
It's
interest.
360?
Yeah, even though it's 365 days in a year, they use 360.
So
I don't know why firms.
if you got $100,000 borrowed overnight, then you're paying $465 in borrow fees for the borrow
Per day.
per day.
Right. It
And
also
then-
changes based on notional value.
Right.
So if you're paying 170%, but all of a sudden the stock doubles, you're actually, in theory, your $100,000 position just became a $200,000 position, and you're now paying double.
And then
what you're paying.
if they halt it for 3 months,
You're stuck
you're
paying
stuck
that
paying it for
without
3
anything
months
ever
straight.
Yeah, it's kind of. I mean, what Rich just said. It's, they're like loan sharks, but that's true. I mean, that's how shorting. That's how that whole game works.
But I knew that I was paying 150+% on it, but I was willing to pay that $450 per $100,000 that I was short, because I thought I could make more than that on the trade. So
Right.
That's why you're doing that.
Right. It gets where it gets crazy is if you have like a
But
a crazy position, and your profits can never even exceed what you're paying in borrowing.
But knowing that, right, that's why I was shorting calls and not shorting stock.
Yes.
Because I'm not going to be paying that borrow on the calls.
Correct.
But where I got screwed and why that number ended up being so big was because I was getting assigned day after day. I couldn't believe I was getting assigned day after. Every once in a while, I've been subject to an early assignment, but I was getting assigned day after day after day. I almost wonder if like the firm that gives us the borrow was on the other side of my trade.
Yeah, that's part of the
We're
game.
like, we're just going to assign this person, so he's got to pay the borrow cost.
I think 100%.
On repeat.
I think 100%. Like that definitely has something to play into it, where they're like, oh, but I don't think it's just you, right? I think they probably have tons of people that are shorting calls and doing that, and they're like, oh, this is a perfect time to take these shares or
what a
shares.
business.
What a business. Yeah.
What a business.
It's
and then third is interest, right? And interest that's just normal, if you got margin interest or whatever, that's just paying to borrow capital, right? So if you've got $100,000 in your account and you keep $200,000 overnight, that means that you are keeping $100,000 in borrowed money overnight. You pay interest on that. That's just very normal.
What's also crazy is some people make a strategy. I actually know a couple people that make a strategy. So there's some like ETFs that actually have negative borrow costs. So like if they're based on like treasury instruments and things like that. So if you hold the stock overnight short, you're actually paid to hold that short, because the rate is not 100%. It's like negative 100. Like there's actually some things that have negative percentages that people get paid on to hold short.
So, you know, and that number also, it floats with the Fed funds rate. So if Powell would ever lower interest rates, then our cost to, you know, keep stock out, would go down. But assume you're paying 7%, you know, then you are. That's the annualized number would be 7,000. So $100,000 over the course of a year, you'd pay $7,000, and then you had to annualize it. So it turns out to $19 a night, which is not too bad.
I think that's also part of the reason, going back to the borrow costs on an overnight basis. I think that's the reason why when stocks that we know are worth zero, like spike, and then they drive them to when they drive them to zero, the company is like foaming at the mouth to reverse split it. Because now the notional, because if a guy's going to short it at 20 cents, they're not going to make as much money as if the guy's going to short some at $10. So they're like always like dying to get the price higher because they know that they're going to make more money by lending out the stock.
Shoaib here giving us their definitions, which is in line with what I was saying. The locate cost is a non-refundable fee to reserve the right to short a stock, while the borrow cost is a daily fee charged on the value of shares actually borrowed for a short position. So like overnight. Do all the stocks aggregate the loan shark cost for a month and then send it? Yeah, you get charged at the end of the month. You get charged per stock.
Yeah,
right?
you see it on your report per stock, and actually
per
the
stock.
days that you held it.
But at the end of the month.
At the end of the month, yeah,
one borrow.
They have to wait
the
for
the locate hits every day in the account. The borrow
only
hits one time at the end of the month.
But
so you need to know what it is. And you know, a core weave being at 170%, that's rare. Like the SPXL, and I'm sure, I don't know what it is. Pat might be able to tell me, but it's probably a percent.
Yeah, it's only usually on short squeeze.
Yeah, short squeeze on a recent IPO where there's not much of a tradable float.
Like the Qs, right? I've been holding. Like I don't even think there is any on the Qs, right? I just think the float is big. Like
a lot of things are free.
Yeah, I just think they're free, as far as I know.
No, you can't get the overnight borrow cost and light speed. You can reach out to the trade support team and they can give you an estimate. And it's only an estimate, but they can give you an estimate.
It is a feature that's being worked on because multiple firms have requested it. I don't know when it'll come, but eventually you should be able to get it at the time. Or at least approximation, because they don't even know exactly what it is until everything like kind of settles out. So it is an approximation.
Easy to borrow. You don't need to locate. There may be a borrow fee. Pat saying SPX is 5%. Yeah, it's nothing. Rich saying, is it safe to say that the higher the locate, the higher the borrow? I'm going to say that that's generally true, but not necessarily the case. I think that that's a general correlation, that the higher the locate, the higher the borrow, but not necessarily the case.
I would agree.
Yeah, exactly.
I'm trying to think of it in my head. I think that would make sense.
That core weave I just showed, the locate's $4.50.
Yeah, I think that would.
That's not much. That's not much at all. But 250% overnight borrow is
that seems like it would be
silly.
But the other risk that you run, also, just so you know, is shorting a stock, especially a hard to borrow stock. Right? There's always the chance that you can get bought in. So firms can get intraday locates a lot easier than they can on an overnight basis. So there will be times when you can be short a stock, you get a locate during the day, you hold it for a couple of days, and all of a sudden you get a notice from the clearing firm that says, hey, we don't have the locate anymore. The guy wants his stock back. It's gone high enough. Now he's going to sell it. Whatever. And you actually run the risk of being bought in against your will at whatever price it's trading because they can no longer get the locate. It's only ever rarely happened like in like
I've had that happen to me one time in my entire career.
Very few situations.
And it was in GLD.
Yeah. Very few situations. And I think by this latest kind of, because they never used to do this kind of overnight borrow thing. Like years ago, it wasn't a thing with these high flyers where they would jack up the rates to 200%, 300%. I think they started doing that to kind of do away with buy-ins. So I think that's why buy-ins become a lot less like it. Is because it's like now, well, yeah, if you're willing to pay 200% to hold the stock, like we'll do whatever we can to get it for you. Like we want the money.
For sure.
It's it's Wall Street. It's a racket, but that's the business.
For sure. For sure. Is a higher from the YouTube? Is the higher borrow cost indicative of volatility? Not necessarily of volatility. I think it's more indicative of just the amount of borrow that's available, and that's going to be a function of the tradable float versus what percentage of it is already short. Selling on the way up to target. Oh, so back to your other question about game planning, I guess, a swing. Say you bought UPS at $100. How would you manage this for a swing, whether it goes lower or higher for $1 million position? Selling on the way up to target, averaging into the position, define potential exits, etc. So your questions, I think, are the answer. If you're putting the trade on, you should be creating a pre-established game plan for that trade based on the type of trade that you're getting. And there's a number of different ways that you can do that. The most important thing is to follow the game plan that you create for yourself. If you're buying, on this day versus $100, then maybe your stop loss is just $100, and that's it. So you're getting fully stopped out at $100 on the stock if it goes down there, and whatever price you're getting is dictating how much stock you're going to buy because it tells you how many dollars you're risking. And then you also are creating a game plan for how you want to make profit if the stock goes up. That could be selling it incrementally, working back and forth increments like I like to do for cash flow, using more of a trailing strategy where you're holding a much larger percentage of your position for a bigger move, but you're eventually going to give some back because it's how trailing works. Eventually you give some back when you get stopped out of the trail. Or maybe you're doing a different strategy on the risk. Maybe you're starting it smaller, but you're giving it a lot more room, and you're building in and averaging into the position, and you're using this last support level at 98.50 as a stop, and you're going to be taking a couple dollars worth of risk, but you don't want to take all your stock all at once because you want to be able to build in if it pulls against you. It's a different type of game plan. The bottom line is the answer to the question of whether it's a day trade or swing trade is irrelevant. The answer to the question of how you manage a position is following the game plan that you established for yourself ahead of time. If you don't have a game plan established for yourself ahead of time, you're not trading, you're gambling. The key to consistent profitability is to have a game plan that defines your edge, and doing it over and over and over again, and have rules in place for every situation that can occur, and those are manifested in the game plan for the trade that you're actually putting on. So I hope that helps. From Robert, so just to understand what happens to you, you held shorting stock previously, then you flipped to shorting options, but the end of the month they charge you overnight cost only from the stock. Yeah, so they're only going to charge you the overnight borrow from the stock. I was holding options, but the options were called away from me. I was short calls, and someone gave me the stock. So whoever was long the calls said, I want to own the stock, which that's how an options contract works, right? You're buying.
You have the option.
You have the option to buy the stock at the strike price, and you can. What some people don't realize, I don't think, is that you can call that options contract ahead of the expiration date. You don't have to wait for it to expire and at expiry receive the stock. If you own the options contract, you can choose to take it at any time. So I was selling CoreWeave calls that were like a few weeks out, that were very in the money because they were moving one for one with the stock, and I'd never done that before. But I didn't want to short CoreWeave stock because I knew it was expensive. So I was like, oh, I'll just use the options. But then the problem was, whoever owned the call kept giving me the stock every day almost. It was becoming like a daily thing, and then I was getting assigned every time, and then it was, and not actually all of it every time.
I don't think
it wasn't all of it every time.
And I don't think you would get assigned it
Right, you're only getting assigned it because it's stuff that's like really moving, and so guys that think, hey, this could possibly be up another $20 tomorrow. They're like, give me the stock right now so I can sell it up $20 tomorrow.
Yeah,
that doesn't happen on like a normal stock.
Regardless, it was a learning experience. Is what it is. Probably won't be doing that move again, because that was, you know, little bit of an expensive bill that I found out about today. So cool. So fun afternoon meeting, learning about how the man in Wall Street makes good money.
Traders get screwed. How the rich get richer, and the rest of us just try to figure out what the hell it is we're doing here in this business.
Yeah, yes, Robert. You see it in the platform. Your options disappear and it becomes stock. All right, gang. I'm gonna wrap it up there. Have a great night, everybody. I will see you all next time.